Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2023 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. During this fireside chat, we welcome Parks America, ticker symbol of PRKA. That's Papa Romeo Kilo Alpha on the OTC, and its President and CEO, Lisa Brady. Before we begin, for those not familiar with Lytham Partners, it is one of the country's leading investor relations firms. With more than 2 decades of corporate access experience, we have built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors while creating a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where we can bring value to multiple constituents. We will dive into the discussion in a moment, but one final item I'd like to bring up is I want to remind everyone that Parks America is available for one-on-one meetings. If you have not already signed up, please send me an email at lowensteiner@lythampartners.com or visit www.lythampartners.com/virtual and click the one-on-one meeting request button. Hi, Lisa, and thanks for joining us.
Hi, Adam. Thank you so much for having us. Appreciate it.
Sure. With that said, let's begin. So in your words, Lisa, can you give the audience a brief description of Parks America?
Absolutely. So Parks America wholly owns 3 safari parks. We own a park in Texas near College Station. We own a park in Pine Mountain, Georgia, about an hour south of Atlanta. And then we own a park in very near Springfield, Missouri. Our parks are one of a kind. They're safari parks where our main attraction typically is a long drive-through where guests are able to feed exotic animals, think giraffes, zebras, and a wide variety of hoof stock from around the world from their vehicles and from guided tours that we have. Our parks also have a more traditional zoo-like setting section, which features, animals from around the world in, unique, basically unique habitats. In many cases, where we allow our guests to have, up close and personal experiences. As I think about, the secret sauce of our business, that's really it. It's that up close and personal experience, that you're getting throughout the drive-through while, an animal has its head in the car slobbering all over you. Or, in our walkabout section where, guests have the opportunity to have a one-on-one encounter with animals such as sloths, and different varieties of animals.
So you were recently appointed president and CEO of Parks America. What's your background like, and why did you feel compelled to join this company?
Yeah. So I joined the company back in November. My background is a bit varied. I actually started my career on the sell side. I worked at KeyBank Capital Markets and participated in their investment banking program before settling in with the leisure and consumer products team. I was at KeyBank for 5 years, covering a universe of companies, including the theme parks, the toy companies, product manufacturers such as Arctic Cat, Polaris. So I would say shortly out of college, really developed a passion for this like consumer entertainment, consumer product space. About 5 years in, I had the opportunity to join Cedar Fair, which was within my coverage universe. And I spent the next 10 years there doing a variety of roles, including investor relations, real estate development, business development, strategy, M&A. So I had the chance to have a broad experience at Cedar Fair. I joined Parks America. I had been on the board for about a year, and I saw the potential, for the public structure here, as well as this unique experience that we provide our guests. I think there's a real opportunity both for organic growth, at the existing three parks, but then also adjacent growth as it relates to just better monetization and utilization of the land around the parks that we have, as well as inorganic growth, from an M&A perspective. So, I saw real opportunity, with the company, and that was exciting to me. So I joined back in November, and it's certainly been a wild ride so far.
So you mentioned the company's properties. Does the company own its properties? What are some of the assets the company has that investors should be aware of?
Yeah, so we own all of our properties, and in most cases, we have our drive-through safaris are anywhere between like 2.5 to 4 miles long, depending on the park. So we own a substantial amount of land. At all three of the parks, we have undeveloped acreage, which I view as a huge opportunity. It was a big part of my role at Cedar Fair, kind of utilizing underdeveloped land. So I would say that's probably our biggest asset. And then our animals, we have at all three of the parks, I believe we have 500 plus animals at every single property, including, giraffes at every park. So there's a strong value in our animals. And then just, physical infrastructure, I think buildings, um, we have a food and beverage outlet at our park in Georgia and our park in Missouri, and we're working to complete the food and beverage outlet at our park in Texas. So that's the really interesting thing I think about the company is, it really like similar to a traditional theme park where, the value of the business is actually rooted in, an asset in land in this facility. Parks America is very similar, which, made it compelling in that it's it's stable, right? I mean, it's the value is kind of backed by that asset, and the cash flows are pretty stable.
So one of your parks recently incurred some damage due to tornadoes in the area. How are things now? Can you share some of your experiences in dealing with such a catastrophe?
Yeah, so that's why I mentioned the wild ride. On March 26th, our Pine Mountain Park in Georgia, which is our largest park, was hit by we believe at least one tornado. It was the level of devastation. It was honestly, it was incredible. The tornado essentially went right through the middle of our walkabout section, and then essentially turned and went through the drive-through. So we had 4,500 trees down across the property, which was just an incredible amount of tree fall. And some of you may have seen we had a brief moment, which of course made global news, with our two tigers, which was actually a tiger and a liger, escaping their preliminary enclosure or habitat. The interesting thing about that, it got a huge amount of press, but the systems and policies that we had in place, essentially the tiger and the liger were recaptured, very close to their original habitat, and were secured within the secondary perimeter that we had within the park. I was so proud of my team. I think the team on the ground did a phenomenal job of, activating. And what was quite truly, it was almost like when you factored in everything that could go wrong, everything went wrong. We had the tornado. It was hard for the park and, the park level personnel to even access the property, with all of the fallen trees in the surrounding areas. And then the, excuse me, the Verizon tower nearby was completely shredded. So there was no cell phone coverage. So it was, made it hard for people to communicate, hard to get around. And, the team still executed, was able to secure our class 1 animals in, a short amount of time, that morning. And, over the next couple of days, we all activated around, tree cleanup and, getting contractors in place. So we were really thrilled. We were able to reopen the drive-through section of the park on April 15th, which was just 20 days after, the initial impact, which, when considering the amount of trees that were down was just truly incredible. So that was pretty cool. The tornado, the timing was just extremely unfortunate. Spring break is a big period for us. And the tornado occurred about 4 days before Georgia's spring break. So we missed, we missed the entire spring break period, which typically represents around 10% of our total season. We're looking at around $1 million of revenue loss from that tornado impact, which was unfortunate. But we've now reopened as of this past weekend a part of the walkabout section, and we're starting to see revenues at that park kind of return to prior year, which has been phenomenal. So all in all, we have a lot to be grateful for.
Wow, that's amazing. Now let's discuss, I guess, that's a little bit of the trials that the company had to go through recently, but let's look at some of the longer term trends. What's your vision for growing this company?
Yeah. So I think it's a really interesting question, and I touched on it a little bit when we talked about the land. But I really do believe, that our up close and animal experience, it's our secret sauce. And I think leaning into that, and really standardizing and optimizing the way in which we provide that experience organically provides upside at the existing properties. So, as I think about growth, I'm really thinking about it in three buckets. The first is organic, which I'll touch on here. The second is optimization of real estate, adjacent to the parks that we currently own. And then the third is, M&A. So on that first point, really thinking about standardizing and upping the level of guest experience over the last couple of quarters, or, across the first 6 months in this role, we've looked a lot at, what does the physical plant look like from a CapEx perspective, and how can we continue to just improve that overall guest experience from a plant perspective. So our capital has really been focused around making larger enclosures for our animals, making them more interactive for our guests, and essentially just elevating the feel of our properties. And so that's the capital side. We're also focused on, investing in areas that are going to generate revenue, the food and beverage outlet in Texas, extending the length of stay within the park, so that it increases the per capita spend for each guest. So there's a lot of room for organic improvement at all three parks. And all three parks are essentially in different life phases. Whereas the Georgia park, has essentially grown over the last 10 years to be where it is today. The Texas park was opened in 2019. So it's still very, very, it's in its infancy as we think about maturity. So I think there's a huge opportunity to continue to grow that Texas park, just from a general awareness perspective. And then the last thing on that organic growth is just standardizing the way that we're operating our parks. Basically making sure that our cleanliness is there, the basics, guest service, that our training of our existing employees and our teams, that our teams are empowered, and they're greeting our guests, and our guests have this, incredible experience with our staff to be able to then go out and have this incredible one-of-a-kind experience with our animals. So I think those things are really going to drive, in the near term, organic growth across the existing portfolio. The second bullet that I mentioned was development of the adjacent land. We have this adjacent land at all three of the parks that we own. And I think there's the ability to essentially add additional revenue streams to these properties, which will, help with helps with cash flow, helps to stabilize the business. So you're less dependent on a single revenue stream. You're less dependent on the weather. And examples of this might include, addition of accommodations, think glamping, or the addition of, horseback riding, or the addition of a zip line attraction. I think things like this, if you continue to add to and expand upon, the existing parks, they become more of a destination, and you're able to capture, essentially incremental audience as well as greater share of wallet of the existing audience. So, I think there's a huge opportunity for that as well. And then lastly, on the M&A side, I think there's the potential to, roll up and standardize, some of this industry. As we look at targets, we're looking for parks that are, in warmer climates. We operate year round at all three of our parks because, the animals, they eat all year round. So the ability to be, in a market where, where the cold isn't as much of a factor is ideal. But, I think there's the opportunity to, standardize this space and create kind of a one-of-a-kind experience, and then, roll that out. So those are the three areas where I see a lot of potential.
And how incremental can some of these improvements be to the current business? Do you have a target in mind?
Yeah, so traditionally, and we'll talk about the pandemic too, because that had a huge impact on this space. Traditionally, like the theme park space or this type of, fixed asset type of business grows, in the 2 to 4% range, like once it's at maturity. So as we think about a park like Georgia, where I would say it's closer to maturity than a park like Texas, you're probably looking at, 100 basis points to 400 basis points north of what that, traditional organic growth would look like. So, 6-ish%, I think is realistic in the near term as we, look to kind of fine tune, some of these underutilized parts of the business. A park like Texas, where the awareness just isn't there yet, I think there's the opportunity over time to really grow the attendance base at that park in a much more meaningful level. We're working through challenges. That park is about 2 hours from Houston, about 2 hours from Austin. So essentially, finding reasons to get the person, get our guests to drive there, I think is going to be key. But longer term, I think there's a runway to really grow that park to somewhat closer to where Georgia is today. Yeah, so I think there definitely is the opportunity to have outpaced growth versus what we've seen in the traditional space. I will point out that the pandemic really benefited this entire industry. So the data is a bit hard to gather, but anecdotally, we're hearing from just different partners and colleagues in the space that the pandemic oftentimes doubled what people were doing. People were up anywhere from 50 to 100% in 2020 and 2021. So there was this huge step up. Families had additional discretionary income, especially in 2021. And they were looking for things to do outside that they could still do as a family, but be socially distanced. And our parks fit that, perfectly, right? You were able to drive through our safari in your vehicle, and you're outside, so that was huge for this industry. In 2022, the entire space from what I'm gathering and the reported results for Parks America, we saw a settling, particularly for us, Georgia and Missouri. Texas held on to a good bit of the gain just because of how new the park was. But, I think the industry saw results come back down to more in line with traditional. So, but still remained above pre-pandemic levels. In 2023, anecdotally, we're hearing, across the first quarter that there's still some settling happening, depending on, different parts of the country. But its results are holding, well north of pre-pandemic levels. So that's been, kind of interesting to forecast, just as, as we're trying to figure out, what does that settled rate look like, after these industries benefited hugely from the pandemic.
So you mentioned also regarding adding more parks in the country. Is that in the plans to do so organically or inorganically, meaning either acquire or build your own? And if so, where?
I think we'd look at both options. The barriers to entry, when you consider this versus a traditional, think a theme park, the barriers to entry are a lot lower, for this type of business versus something that has a lot of, infrastructure and buildings. And, so I think we'd consider both. As I look at it, I think the most important thing is market selection, and being, a distance to a good population base. Because, that's really truly going to determine where you peak out at attendance and your profitability. So like I mentioned, we're looking at markets, we're looking at southern markets where we can operate year round, and we're looking at markets with growing population base. So it doesn't. I know that doesn't narrow it down a lot, but I think we have the opportunity to be really choosy around what markets that we do go into. Just to ensure that we're able to we're in the right markets, we're in the right area, and the proximity is right. I think that's honestly, that's really the biggest factor. Being within, a 45-minute-ish drive radius is really ideal for this type of, local to regional attraction.
And what's the competitive landscape look like in the industry?
It's extremely fragmented. And we see competitors pop up and then close. And like I said, the barriers to entry are just, they're not so substantial. Even think a water park, to build all the pools and slides, and there's a huge investment there. The barrier to entry is low, so we do see competition pop up, and then close. And so I think, I think there is the opportunity for consolidation, particularly if it's in the right market. But I would say that's where we're going to be the most diligent, is just on that market selection. And, from there, looking to build versus acquire something, I think we'd look at either, just because of, that being such an important factor, the having a close population base.
Can you share any feedback from customers that go to any one of your parks? What's the typical demographic like?
That's the interesting thing. And that's what I love about this business. I spend a lot of time out in the parks. It is so great to see, we see a lot of varied demographic, to be totally honest, but our sweet spot really is families with kids from ages 2 to 12. Um, Oftentimes, those groups though are accompanied by grandma and grandpa, and we see a lot of large family units traveling to our parks. Um, it's really interesting in this space. Animals appeal, like, honestly, just broadly appeal to, a wide variety of consumers. And I think, while that age, families with children of age 2 to 12 is a key customer. When I was in Georgia this past week, I saw a bus of 100 retired folks coming to the park, and they had a blast feeding the animals. So I think the broad appeal really helps us, and animals are, it's kind of that the educational overlay that animals provide, which as a park we're really leaning into, the conservation message and the educational overlay as it relates to incremental signage within the parks, and these keeper talks and these up close and animal experiences. I think that adds to the depth of the overall experience, just kind of broadening that appeal. And the cool thing about some of these experiences, everybody comes to the park, they can drive through the drive-through, though, we can essentially target the higher demographic with these upsell attractions, such as, the sloth experience. If you have, discretionary dollars to spend, for another $75, your entire family can have this sloth encounter. So it's interesting. We're able to essentially segment that audience while still appeal to, a broad range of, household income and demographic. I know that doesn't perfectly answer your question, but it's broad. It's really broad, and it's interesting. It differs a bit park by park as well, from who we see coming. But I would say like that, if I had to pick a core audience, it would be families with kids age 2 to 12.
Seems like a fun time for any age group.
Yeah. You see people, on their first date. You see, it has a very, very broad appeal.
Is there any seasonality in the business, and are there ways to mitigate that?
Yeah, there definitely is seasonality. During the off season, summer's our peak time, the spring break period, and then summer, when kids aren't in school, families are looking for things to do. The winter is certainly a low time for us, and then we start to pick up once we get towards the spring break period over the course of the summer, through that mid-August timeframe when kids get ready to go back to school. We're open year round, like I mentioned, because the animals eat all year round. And so we're looking at ways to essentially, balance out that seasonality, both with dynamic pricing, which is a strategy that we're looking to implement, heading into the 2024 fiscal year, where the price point is a bit lower. During our low season, we don't have capacity issues necessarily, and it's a good way to get guests to come out, on the weekends, in January or February. We're looking at events, kind of adding events or, reasons to come to the park. Our Missouri park, we tested a Christmas light event, and we're looking to add, essentially low operational cost events to all the parks. Think, a pumpkin festival at the fall, during the fall, and just additional incremental programming, especially in our low season to attract guests. And then I think the big undertapped, thing here is season pass or membership, which it does not represent a substantial amount of our business currently. And I think there's the opportunity, particularly as we invest in the guest experience and the overall feel of our walkabouts. I think there's the ability to really tap into that, that membership program, and, essentially get families to commit to, the membership and get incremental visits out of them during the off season. The other big thing is that adjacent expansion. I think, if you were to add accommodations, I think that helps balance out your seasonality to a certain extent, because people are still looking to travel. They're still looking for things to do, and I think if you can add accommodations, which there's a fixed capacity, I think you can drive additional business then to the properties, additional business and additional revenue during that traditionally slower period.
So you're a publicly traded company. Are there any goals to get on a higher trading exchange? What's your thoughts about that?
Yeah, it's definitely something that we're looking at and considering. This year we're currently focused on some of these core growth initiatives, but we're in the process of developing a multi-year strategic plan, which one of the considerations certainly would be potentially uplisting, and looking at just different ways to generate capital to continue with a roll-up strategy. So yeah, it's definitely something that we're considering, and particularly as the management team, as we work through the development of this strategic plan with our board, it's something we're looking at.
So we have a few more minutes here. Let's before we wrap up. Lisa, what should investors be on the lookout for in the coming quarters?
Yeah, so this next quarter, or this quarter, our fiscal second quarter, we have a lot of noise with the expense, essentially the expense and lost revenue from the tornado. But I think from an investment, after you adjust for some of those items, I think really looking at basically revenue, the sales-based revenue, as well as attendance and per capita, I think that's something really to keep an eye on. After stripping out the impact of the tornado for the second quarter, we had really strong, good momentum in the core business of the parks. So I think that's going to be a key metric going forward. And then as we start to invest in the walkabouts, and I think continuing to monitor that that attendance, that attendance-based revenue, as well as the per capita, I think that's going to be huge. We're continuing. The business has always run very, very lean, so there isn't a huge amount of savings necessarily on the OpEx side. I think where we're as we grow and as we add additional revenue, both organically from a growth perspective of developing adjacent land, and then from additional parks, I think that's where the scale comes, as we're able to, essentially build a bigger base. So in the near term, definitely the key revenue trends are going to be something to keep an eye on.
Okay, so to wrap up, anything else you want to say before we end the discussion?
No, I appreciate Adam. Really appreciate you guys having us here, and I would welcome anybody to reach out. We're happy to talk with investors, and we're really looking to get the story out there over the next couple of months as we look to build this company and take it to the next level.
Lisa, thank you very much for your time today. We greatly appreciate it. To anyone out there that has not already signed up for a one-on-one, again, please send me email at lowensteiner@lythampartners.com, or again, visit www.lythampartners.com/virtual and click the one-on-one meeting request button. We hope you all enjoy the conference, and Lisa, thanks again.
Thanks, Adam. Appreciate it.